In this video, I will discuss venture capital funding in the California tech sector. I will look at the trends that permeate the industry and the opportunities that exist for international startups. I will then use a case study on Intercom to explain these trends and opportunities in further detail. The California Bay Area is really a hotbed of tech innovation and entrepreneurship, and importantly, funding. There are a number of venture capital firms, which you can see here. Some have been around for a long time and some are new to the game, like KPCB. Integrated circuits are what made Silicon Valley famous. Hardware is still designed there to this day by companies like Flextronics. However, there are a range of other industries which have really taken over the Bay Area. The internet and the web have changed the face of the world, and it is expected that the Internet of Things, big data, the shared economy, and biotechnologies will do similar things over the coming years. The Bay Area is a hotbed of expertise, advice, and opportunity. It has been said that in Silicon Valley, you're only 3 people away from where you need to be. Clusters stimulate and foster innovation. They also facilitate the formation of new business and the commercialization of ideas, and they increase productivity and operational efficiency. I'm going to use Intercom as an example here. The Intercom's management team decided early on that they were going to set up in the Bay Area because they knew that it would give them better access to funds than they would be able to get in Europe, having previously set up another company in Ireland. They knew that the risk appetite in the Bay Area was like nowhere else, and that it would afford them the opportunity to really get their venture off the ground. I'm now going to look at the key trends in venture capital in the Bay Area. Investors in the US have been yield chasing as a result of record low interest rates for years now. As economic conditions have improved more recently, more money has flooded into venture capital funding in the US, as you can see here in this graph. Venture capital investment in the Bay Area has also been rising, and on average, the Bay Area receives 35% of all venture capital investment. This was one of the key reasons why Intercom's management decided to locate in San Francisco. Average deal size has increased since 2008, and this has in large part been driven by an increasing number of mega deals, that is, deals that are of $100 million or more. The increase in average deal size can also be attributed to VC funds waiting until companies are generating revenue. In the past, they invested more of their funds in the startup and product development stage, but now they seem to be putting off investing until the company has generated some revenue, at which point they require significantly more funds. One consequence of increasing deal size and more deals at a late stage is that valuations are increasing. All you have to do is look at Uber and Airbnb for good examples. It is also worth noting that these increasing valuations are pricing a lot of companies out of M&A. As can be seen here, there is an increasing focus on both the consumer services industry, which includes companies like Uber and Airbnb, and investment in the business and financial services industry, which includes companies like Intercom. These companies are in sectors which are being disrupted and transformed by these companies. The companies being invested in this space have had to prove not only the ability to gain traction, but the ability to generate revenue. These companies need to prove that they will actually transform the industry, and this is one of the reasons why investment is being done at a later stage of development. Competition has increased among a few large VC firms, while there are more sources of funding than ever before. The research company Preqin reported that 39% of VC managers in a survey confirmed that they had seen a rise in competition compared to 12 months ago. The democratization of entrepreneurship has also pushed funding further along the S-curve. New tools such as Stripe and Dropbox have made scaling a business easier and cheaper. I'm now going to take you through a few of the lessons that Intercom learned along the way. They found that it was difficult to be an outsider and that coming in, you really needed to have a cool product in order to fit in. They found that it's important to meet and talk to everyone, but not to listen to everyone as they don't all know more than you. They found that they needed to really have a clear vision and to stick to it, and they needed to remember that no amount of money was worth having to change your vision. They said to really spend on people and to speak to those and seek those people that you don't think you're going to be able to get. And finally, that timing is everything. I'm now going to take you through the opportunities which exist for international startups. The risk appetite in the Bay Area is unrivaled. With a cool product and a great team, startups can get access to funding. VCs only ever expect 1 out of every 10 investments to pay off. Intercom was one such risky venture, but it is now living up to its potential, growing 5 times per month. It's clear that one of the biggest draws for international startups is that they get easier access to intangible assets which can fill value gaps or resource gaps which exist in their company. They also get access to US business and technological know-how. Intercom management found VCs more receptive to them having located in San Francisco. The increasing availability of exit strategies is another thing that draws international startups to the Bay Area. 2014 saw 1,049 venture capital exits with an aggregate value of $120 billion. The largest VC exit in 2014 was the $25 billion IPO of Alibaba Group in September 2014. By June 2015, only 7 VC-backed tech companies had gone public. However, the pipeline is strong with 25 new unicorns in 2014. M&A is expected to be more prevalent among younger companies as many late-stage companies have been priced out of M&A with their high valuations. To conclude, I will summarize the points that I have made. The Bay Area tech sector is renowned for its unique business environment, and it really is unique because of both the clusters of tech companies and the clusters of VC companies which are in the area. The decision of a tech company to locate in the area is a clear indication of the value that they really attach to getting to know people and contacts, knowing the cultural norms that help when operating a business in the area, and getting to grips with the know-how of the industry. From a managerial perspective, by locating within the cluster, companies can experience the trends which are permeating the industry to their fullness and in real time. Companies in the area can also make use of the opportunities in terms of the people, know-how, systems and processes which they would not otherwise have direct access to were they not in the area. And finally, by launching in the US, a startup is launching in one uniform market.